Good morning, student. So, sixth lesson is going on banking. Already seven sessions over, and then next topic is Reserve Bank of India and Industrial Finance. First meaning, the development banks are those financial institutions which provide the term finance, promote entrepreneurship, enhance organizational effectiveness, and upgrade known how and do how. They provide either loan or equity capital or both, as also advisory, promotional, and entrepreneurial service. Thus, development banks administrator is a blend of financial and development services. So, Bosquez define a development bank as a financial intermediary supplying medium and long-term funds to bank-able economic development project and providing related services. So bank providing a loan for entrepreneur. So entrepreneur get the loan and develop to our business. So the bank providing a loan for long term loan and medium term loan also provided. So every bank to give the rules and regulations offered. So already you know the bank details from the entrepreneur. How at the same time to get the loan from the bank and start to develop our business. So entrepreneur to get the loan for long term loan and short term loan and medium term loan also to get the loan from the bank and to develop our business. And then next one is functions of development bank. So development bank have a certain distinct characteristics which distinguish them from commercial bank and other financial institution. They first one they provide a risk capital, and second one the grant medium and long term loans or advances to the bank providing to long term loans or advances provided to the entrepreneur. They subscribe to the issue of stocks, shares, bonds, and debentures of industrial concern. They underwrite the issue of stock, shares, bonds, and debentures of industrial concern. So, underwriting means sign and accept liability. So, responsible for bank to providing a loan to industrial concern to give the shares, bonds, and debentures and everything underwrite the issues. So confidential to give the loan, and then guarantee loan raised from within the outside of the country to get the loan from outside of the country, and then foreign investment also get it. And then they guarantee deferred payment of loan in connection with the purchase of capital goods or machinery within and outside the country. You purchase of capital goods and machineries you get in purchased in within the country or outside of the country. So the payment offered by the bank only for loans provided to entrepreneur. They develop the capital market by trying to burden ownership and by the other devices. They provide the assistance for setting up new industrial project. And then so entrepreneur submit our new project, and then bank go through it and providing the loan. And next one, they provide the assistance for the expansion of existing units. So some entrepreneur to extend our unit to get the loan from the bank. They provide the assistance for modification, re-innovation, and then modernization of existing plant and machinery. So new methods, reconstructions of buildings and new methods of technologies are adopted, and then modernization of business and the everything, so modifications, re constructions. So bank providing the loans, they arrange the general industrial survey and feasibility studies for specific project, and then they formulate the specific proposals for the new enterprises. They assist of finding the technical and entrepreneurial partners for the local client for the foreign investors. They provide the consultancy assistance in respect of technical know-how and market informations to new entrepreneur. So everything, so market awareness and then market knowledge is a new technology invention. So how to operate it, that new machineries, and then what are the benefits and everything, that entrepreneur. They provide the necessary guidance, training, and other facilities like a project identification, project formulation, project implementation, etc. to the new entrepreneur. So, so started the new business means to arrange everything, so guidance, how to develop our business, and then training for 2 months or 3 months or 6 month training provided to the entrepreneur, and the project identification and project formulations and everything to given to the new entrepreneur. A new entrepreneur started the business, so everything guiding by the banks. They sponsor program for the upgradation of managerial skill and professionalism of management. So manager skill is a very very important. So effective persons to develop the business. So manager skill means to develop our business. So effective skill is a mm, one of the skill of our business success. Though the industries get finance from commercial bank, and quantum of the term will be very much limited generally. So commercial bank only giving for short term loan only. At the same time, get the loan and deposit from the public only for short term deposit only accepted. So further lending to industries only for a fragmentation of the total lending by the banks. And then the industry is providing for short-term loan and long-term loan. So there is a need and urgency to establishing a long-term credit facilities to the industries. So India for financing and formulating industries are as follows. So institutional setup. So first one is the All India level institution. Industrial Finance Corporation of India, IFCI. Industrial Credit and Investment Corporation of India, ICICI. And third one is the Industrial Development Bank of India, IDBI. And the next one is a state level institution. State level institution, State Financial Corporation, SFCS, and State Industrial Development Corporation, SIDCS. Let us see one by one. First one is Industrial Finance Corporation of India, IFCI. So the IFCI was first developed, established in India in 1948. The IFCI was the first development bank established in the year 1948. It has been converted into public limited company with an effective from 1st July in 1993. Its main objective is to make the medium and long term credit to the industrial concern in this private and public and joint and cooperative sector in India. It is a subsidiary to the IDBI, which hold a 50% of the share capital. The 50% of share capital held by IDBI and remaining 50% held by insurance company and cooperative banks. It argument its a resource by borrowing from government of India, RBI, IDBI, UTI, LIC, and by issuing the bonds and debentures in the market. And then the market and by borrowing in the foreign currency from the World Bank and other foreign organization. So IFCI provide the assistance to the industrial economic concerns in this following way. One is a long-term loan. Long-term loan means both in rupee and foreign currency. So both are given for long-term loans. Second one is the underwriting of equity, preference and debentures issues. So underwriting means sign and accept liability. So provided. And third one is a subscribing to equity preference and debentures issues. So subscribing means arrange to receive something, some publications and regularly by paying the advances. So guaranteeing and deferred payment in respect of machinery imported from abroad and purchased in India. You get receive the l- deferred payment. So payment in machinery imported from abroad. So new machinery imported from abroad are purchased in India to giving the deferred payment, and then guaranteeing of loan raised in foreign currency from foreign financial institutions. So IFCI can be availed by any limited company in the public and private or joint sector or by the cooperative society incorporated in India. The new industrial project also for the expansion and diversification. So renovation or modernization of existing ones. So IFCI also provide the financial assistance on concerned terms for setting up industrial project and industries. Industrially less developed district in the states or union territories are notified by the central government. So IFCI raised its resource by the way one is the issue of bonds in the market. Already you know that a bonds, so the bonds is issued in the market. Second one's a borrowing from the industrial development bank of India and the central government. Third one is a foreign credit is secured from foreign financial institution and borrowing the international capital market. So foreign credit getting from the capital market. And the next topic is Industrial Credit and Investment Corporation of India, ICICI. The ICICI was established in January 1955 as a public limited company. It is a private sector development bank in India. The World Bank play a key role in its formation. It authorized capital is rupees 100 crores. About 11% of its share capital is held by the World Bank and other foreign financial institutions, and the remaining by the Indian banks, UTI, GIC, LIC, etc. So during 1990 to 91, for the first time, ICICI entered into the capital market. So when was ICICI entered into this capital market means 90 to 91 with the public issue and raised for 100 crores. And then objectives of ICICI. First one is to finance for foreign exchange component of industrial project. Second one, to provide the assistance in this creation, expansion, and modernization of industrial enterprises. To encourage the promote industrial development and investment. To expand the capital market in the country. And then first one is the functions of ICICI. First one is a financial assistance. First one, project finance. Project finance means assistance for project finance is by way of rupee and foreign currency loans, underwriting and direct subscriptions to shares and debentures and guarantee. And second one is a financial service. The financial services to industry include the assistance under the scheme of deferred credit since in 1982 and 83. So equipment leasing since 83 and 84 venture capital. During 86 and 87, 87 to 88 installed sale and 88 to 89 assets credit facilities. And third one is a merchant banking. So merchant banking means ICICI also render the merchant banking services. And fourth one is a commercial banking. ICICI banking corporations of the commercial bank since in 1994. And next one is a promotional assistance. Assistance to backward area. The project finance assistance on concern the term to industry in backward area. You started the business in backward area, the government providing the subsidy. So it also give the loan on soft term to suitable rural development schemes sponsored by corporate bodies. It extend the financial assistance in this form of seed money or margin money or interest rate subsidy in backward area. At the same time, you select a backward area means government providing a subsidy and reduce the tax, so everything. At the same times, the entrepreneur get a more benefit from the business. So most of the entrepreneur started the business in backward area. And second one is project assistance. So ICIC provide the assistance a new project onto the expansion and diversification project. So renders assistance for modernization, rehabilitation, balancing equipment project. So further it provide the supplementary assistance to industrial concern, which include equipment finance and finance for meeting cost overrun for various other purpose like energy conservation, population control. So everything the bank providing the loans. So project assistance. Third one is technology upgradation. So technology upgradation means the number of institution for the technology upgradations promoted. It has promoted TCOs in a number of states in collaboration with IDBI, IFCI and state level institution. It's a provide the assistance to Indo-US collaboration project, and then many of them is there. And fourth one, fifth one, it has a promoted new company. So new company so providing a share registry and a transfer service to investor. and venture capital. So venture capital operation of the ICICI have been taken over by the TDICI since July 1988. And then last one, it has promoted a mutual fund. And the next one is a IDBI. So IDBI was established in July 1964 as a wholly owned subsidiary of the Reserve Bank, but was made an autonomous institution in February 1976. At the time of its formation, it took over the Refinance Corporation of Industry, which was set up in June 1958. At present, the IFCI, UTI, and Small Industries Development Bank of India are its subsidiaries. Since 1986, the authorized capital of IDBA has been raised to rupees 1000 crores, which can be further increased to 2000 crores. It mobilizes fund through borrowing from the government of India, the RBI by way of bonds, debentures, by selling capital bonds through the investment deposit account scheme, foreign currency borrowing, etc. And then functions of IDBI. IDBI is the affects institution in this sphere of development banking in India, which perform the financing, coordination, and promotional functions. It renders assistance to small, medium, and large scale industries in public and private joint and cooperative sector. So, IDBA is a financier. First one is a financier. As a financier, the IDBI rendered the direct and indirect assistance to all the types of industrial concern. First one, scheme of direct assistance. The direct assistance to industry under its project finance scheme and technical development fund scheme. The project finance scheme also cover the assistance under the textile modernization fund, venture capital fund, and technology upgradation, energy, and subsidiary also included for these schemes. Second one, schemes of indirect assistance. IDBI rendered the assistance to industrial concern. And third one, refinance of industrial loan. So indirect assistance by refinancing and term loan extended by SFC, SIDCS, Small Finance Corporation, Small Industrial Development Corporations, commercial, cooperative banks, and RRB and industrial concern. And next one is a bill rediscounting schemes. This scheme is meant to help the use of indigenous machinery by industrial concern. The purchaser draw a bill from favor of the manufacturer of machinery who discount it with his banker who in turn get it rediscounted from the IDBI. And next one is the seed capital scheme. The finance assistance is available to entrepreneur for meeting the gap into promoters contributions as well as the equity where no issue of public shares is done. Next one, assistance to leasing company. The financial assistance is also sanctioned to leasing companies for refinancing their hire purchase and leasing schemes. And next one is a resource support to the other institution. IDBI provide resource support to the other financial institution by subscribing to other shares and bonds and debentures such as IFCI, ICICI, SFCS, SIDCS, NSIC, TCOS, etc. And next one is a merchant banking. So merchant banking activity and help industry in raising the capital from the market and render advice. And the last one is a commercial banking. So IDBI Bank Limited 1995 as a private commercial bank operated. And next one is a coordinator as a coordinator. So IDBI as a coordinator. The primary objectives of IDBI is to act as a coordinator. So, coordinator the activities and operations of the term lending institutions and engaged in financing, formatting, promoting or developing industries. So, coordination is achieved through the inter-institutional meetings and a uniform policies and a code of conduct in formation of the policies. This has led to the emergency of custody of financing. So, coordinator is the organizer of the institution. So, every policies implemented to the industry at the same time all the informations uh, instructed by the coordinators. So the plans and uniform policies, arranging the meetings and everything is followed by coordinators. And then next one is a promoter. IDBA as a promoter. This is an important functions of the IDBI which includes the planning, promoting and developing industry to fill the gap in industrial structure of the country. For this purpose, it provides the technical and administrative assistance, undertake market and investment research and survey also technical and economic studies related to development of the industries. So the promoter to related for industrial structure of the country. So how to develop the industries, what the structure, how many crores is started, what are the plant implemented, how to run the machines and how many labors are worked. So everything's a time allotment and then uh, mm, machineries are plans and everything is planned by the promoters. Development of backward area. First one is the development of backward area. So the backward area for assessing their industrial growth, the potential and publish report, the identify the project which can be implemented in this specific backward area. The reason for both the direct and indirect financial assistance for the implementations of such project in the backward area. So, previous years, Mr. Kamarajar introduced the planner. So, any one entrepreneur you come forward to start the business in backward area, uh, you will get the subsidy at the same time. So tax everything is uh, given to you. At the same time, so small portions you will pay only. So that announcement gave by Mr. The Chief Minister Kamarajar announced for our early days. So nowadays many entrepreneur started the business in rural area or backward area to get the subsidies and loan and tax reduction, so everything get used. And then so theaters, and then textile industries. So everything you started in rural area, the government providing a many benefits to the entrepreneur. The reason for to to give the employment opportunity for the workers. So the government providing the facilities to the entrepreneur. And next one is promotion of institutions of SSI. And first one, the promotions of SSIDBI promoted the Small Industries Development Fund, SIDF. And second one is a NEF, National Inquiry Fund. And the to given to the small scale sectors. In 1990, the IDBI created Small Industry Development Bank of India, so wholly owned a subsidiary from April 1990. The SIDBI took over the operations of the two funds. Two funds, one is a small scale industries development fund and another one is a national enquiry fund. These are two funds used to benefit of the banks. And third one, promotion of institutional of SSI. IDBI has sponsored the credit rating agency CARE. It has entered into corporate trustship by accepting assignment to mortgage trustee and a trustee to odd lot shareholders. And next one, it has also started a stock broking. And the next one, it has a set up the mutual fund. And last one is the establishment of technical consultancy organization. And then next one is these three are all India level institution, and next one is a state level institution. The state finance corporations, state SFCS, state SFCS are the state level financial corporation, state level development bank for the development of small medium scale industries in 18 states of India. They aim at bringing about a balanced regional development by wider dispersal of industry, promoting greater investment and generating larger employment opportunity. Beside their paid up capital, and state financial corporations argument their fund by borrowing from the others. The government, the RBI, IDBI Bank, and by the way of bonds, debentures, by accepting deposits and the sale of investment in shares and debentures of the industry concern. And first one is a functions. They provide the financial assistance. Second one, they meet the term loan requirements. They provide a loan from setting up a new industrial unit. And fourth one is they also promote the development of medium and small scale industry. SFCS provide the equity type support, and then SFC operate under the number of schemes on the behalf of the IDBI. And the next one is a small industrial development corporations, and then SITCO. The SITCO provide the financial assistance industrial concern by the way of loan guarantees and underwriting of the direct subscriptions to these shares and debentures. In addition to this, They undertake the various promotional activities, such as conducting techno-economic survey, project identification, preparation of the feasibility studies, and the selection training of the entrepreneur. They also promote joint sector project is association with the private promoter in such a type of the project. Sitco. Uh, Sitco is a small uh, financial institution, small industrial development corporations. So the small industry development means you started a business at the small level. Sitco, already you know the name for Sitco. Madurai to Tirumangalam bypass. So near Kappalur, Sitco's, you see the board for Sitco. Many of the small scale industries are running here today also. Today also running here. So example for Parleji company, and then Siruvar Kala Mandram. So book, textbook, notebook preparation, and then printing goodowns are there. At the same time, another one, AD or plastics, mug, and then many vessels. So plastic vessels are protection is going on. And then bicycle wheels on the box, and bell, and everything is a um, protection, everything product produced by the industries. And many industries are car parts preparing, and hundreds of small scale industries are working in Sitco near Kapalur. So the entrepreneur to get start the business, uh, to get the loan from the bank, and to develop the economic development. So the promoter in such a type of project, Sitco take a 26% of private co-promoter takes, and 25% of the equity, and the rest is offered to the investing public. Sitcos undertake the development of industrial area by providing all infrastructure facilities and initiations of the new growth centers. They also administrative various state government initiative schemes. Sitcos get refinance facilities from IDBI. They also borrow from the bonds and accept deposits to getting the loan from the entrepreneur to start the industries, and to to achieving the economic growth. So this topic also included for Reserve Bank of India and industrial finance. Once again, uh, already I told all the topics. Once again I repeated. So first one is the industrial finance Corporation of India, Industrial Credit Investment Corporation of India, Industrial Development Bank of India IDBI. These three all India level institution, and then state level institution. All India level institution means you getting the loan from foreign countries abroad to get the loan, and to receiving the foreign currency and everything, to circulating in the all India level. At the same time, state to state, you have to use the fund only for state financial corporations only used. The state industrial development corporation have been set up by the state government, and they are wholly owned by them. These institutions are not merely financing agency. They are entrusted with the responsibility of accelerating the industrialization of their states. State relationship only for tracking to the state relationship. So these are also included for this topic. Thank you, students.